Good morning. Top up with the coffee and we'll get going. How you doing? Should we get going? It's, what is it, 8:08? First time here. Hey, I've been live streaming on YouTube since day one. Where you been the last 15 years? Make sure you subscribe, huh? But welcome. All right, guten Morgen. Let's get on with it. All right, let me kill the music. Hey, YouTube, this is royalty-free music. Huh? No copyright slap or infringement. Yep, it's all good. YouTube, all go. So welcome, welcome, welcome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Like rent, like medicine, like cigar money. You know, you got to put everything in priority. Hey, my name is Wayne. I salute you. We're on this journey we call Forex. Yeah, Forex. Foreign exchange. It means we need money to cross borders. So what I like to do is combine technical with fundamental analysis. Oh, yeah. I wrote a book. Oh, yeah, you know what? I have it on the website, don't I? I wrote a book a long time ago called Strategic and Tactical Forex Trading. And it just explains the whole idea of what I've been doing for the last 20 years or more than 20 years as a Forex trader. Strategy and tactics. So you can put that in a couple of ways, long-term versus short-term. Or you can look at it as fundamentals and technicals. Fundamentals first, technicals first. Yeah. So when I first started trading, you'd open up a trading account and guess what? You didn't even get charts. So then you'd go to a charting provider and pay $200 or $300 per month for charts. So the way I taught myself how to trade was I'd spend about an hour, I guess. It'd take me about an hour. I'd get the overnight volatility data from the brokerage, right? It was just flashing lights, but you can get the information on how much each asset moved and which direction. So I'd gather all of that and basically kind of make an index out of each single thing. So I created my own euro index, my own dollar index, my own pound index, my own CAD index, and then organized them by strong versus weak. And then paired up the strongest with the weakest based on what had happened over the last 24 hours. But then back then, like trading pound yen was like 12 pips spread. So then very often I knew there was like correlations and stuff where I'd have to spend time and say, well, I might want to sell pound yen, but I can sell pound dollar and get 90% the same pippage, but for 50% of the upfront cost. So you actually would have to take that in account because everything was so expensive. Now everything's so stupid cheap, right? Like with an ECN, oh my God, just your trading costs are so cheap. Just imagine you don't have to spend $300 a month on charts. Yeah. Yeah. Oh, it comes with your platform. Oh, and you can trade on them. So think about it. You're not even making the mistakes that traders used to make all the time because your charts were for analysis and all your trades were on the broker and they were not connected. You couldn't see, and you'd always leave like stop losses were not taken out and all that kind of stuff. Okay. So anyways, pretty interesting stuff. So all I'm sharing with you is my background here. For the longest time, I've been a technical and macro guy. And I have a macroeconomics degree. Cool. And I know a little bit about finance and space. Yeah. All right. So that's, and so we have our fundamentals. Okay, let it load. Okay, we have our fundamentals. Hey, dollar index is back. Good. We have our fundamentals. We have our technicals. This is all automated. We have scalping tools. Right? Like the Bank of Canada interest rate decision, we can tell you there's no scalp. There's only a swing. How do we know that? Through all the data and research. Like, dude, it's insane. But I like our little vol. This is nice. Right? Beautiful. I have other tools I'm about to launch. Okay. Squawk boxes like this usually cost $100 a month, $200 a month, $300 a month. Yeah, it's included.
Euro, US dollar. Outperforming stocks may provide some backing. Scotiabank.
Canadian dollar trades softer into Bank of Canada policy decision, Scotiabank. Gold goes nowhere ahead of Fed interest rate decision. US dollar grinds higher ahead of FOMC, Scotiabank.
Euro, US dollar.
Right.
Outperforming stocks may provide some backing. Scotiabank.
Canadian dollar trades softer into Bank of Canada policy decision, Scotiabank. So that's reading the headlines to you so that you're always informed while you're trading. I'm about to launch this where TRADARS is actually gathering hundreds of articles from dozens of websites and reading them for you. Like, why would I want them to read them for me? Because it remembers for Netflix, the 104 articles that it read on 27 different websites. It read the articles, literally read the articles, and understood whether it was bullish or bearish information about Netflix. And just over the last 7 days, it read 104 articles just on Netflix. Dude, right? Cool. So now we're reading the news articles, the full articles, understanding what they mean, doing the aggregate score, and then we also plot it over time. So the negative 45, so it's not good right now, but that's over the last 7 days. And then we track how this has changed up, as far back as 90 days. Dude, this is insane. Insane in the membrane. Insane in the brain. It's great, right? So we're going to launch all this. They all work. They're running. People are using them. I just got to build a spot on the website for them. It's just really cool. And the coaching. Right? So even today, the 29th, there's 3 webinars we've already done. This I count as the 4th webinar for today. Okay. Wonderful, huh? It's all live coaching. Just crazy. You know what we don't have, though? Well, we also have video training, 100 hours. But what we don't have is execution. So, right, we're not a broker. And you need a broker to execute. You want an ECN, they're just cheaper and faster. But also, brokers that offer ECNs, they don't trade against you. The only way they make any revenue is when you click a button, they execute it into the interbanking system through their liquidity partners. All other brokers just trade against you. So anyways, so you need an ECN. That's for sure you need an ECN. So there's not many. There are a few, but not many. Start with your due diligence with Traders Way. Maybe they're appropriate for you. Maybe you like them, maybe you don't. But you should start. You need to move your money to an ECN. And so TRADARS and Traders Way, hey, it even sounds good. Okay? So you'll have to do your own due diligence, Joshua. Use ChatGPT. But anyways, TRADARS and Traders Way is, a marriage made in heaven. Yeah, it just makes sense. So I've known them for 10 years. Yeah, cool. Cool, right? Cool beans. Yeah, TRADARS and Traders Way. So anyways, let's see how we're doing. Okay, this is the nice thing about longer term trading. You see this deployment here if you want to look at it that way, but where's my drawing tool? Let me get my handy dandy notebook. What's really going on is even on a higher time frame, there's just this. That's it. That's the only thing going on. There's a there's a bunch of APIs. Yeah. The TRADARS is a rat's nest of data. Like, it's very complex. Yeah. And yeah, so it's not that easy where, just pop into this thing. But anyways, this is what's going on, and that's it. So what happens to retail traders is they get caught in all of this, right? All of this noise. And maybe it's really good, maybe it's a bloodbath. But I've been recommending for a while that you step back and you see the forest. Can you see if we look at Aussie yen weekly chart? And all I have here is moving averages. There's nothing special about any of this. But we did have the collapse. We did have a retracement. Okay. But what would you do technically now? It looks like a rollover and a drop, doesn't it? No, Don, but what we're looking for, Don, is that people become sellers. Okay. And part of that is, like, see, people were guessing whether the Bank of Japan would raise interest rates or not. And we had all the data, so we weren't guessing. But it's what the rest of the market knows and thinks, not what we know and think, that matters. And so now people are like, oh, I guess the Bank of Japan is going to raise interest rates, so there could be a change in that regime. We also know technical analysis that it's bearish. Well, yeah, you're right, Don, right. That maybe, well, I would say more than maybe that would be it. But see, they didn't know. We've known for months. Many months, in fact. All right, cool. So that might be in play. We also are bearish on Aussie dollar. Okay. And using this longer term chart, you could see that we can kind of make a lower low and kind of a lower high. And we could do this for months. What happens, Don, in, let's say, Canada Day, July 1st? What happens to the yen pairs? What can we guess is going to happen to the yen pairs in July? So once again, if you guys are not familiar with TRADARS, we already have July plotted out for all the yen pairs. Like, we have a strategy already. It's just, if you don't know, if you can't plan something weeks or months in advance, you just don't know what's going on. And people that have hung around the wane over the years have seen me do it consistently over and over and over again. And all of a sudden, like, what I'm trying to say is there's no genius. There's just knowledge. Veritas, right? Illuminati. The veritas means you have power from knowledge. So, like, Don's right. So I'm already planning. Guess what? Aussie yen is likely to fall 5 months from now. So what if we just kind of continue with the rate hike theme and this gets strong? China continues to be vulnerable, so this stays weak. So we're leaning this way, but it's anti-seasonal, so there's a headwind. We get to about June or July, and now there's a tailwind. Is this possible? Yes, that is a possible strategy. Okay? Is that going to happen? Oh, I don't know. But it's plausible, isn't it? Isn't it? Right? That's probably worst case scenario for this pair, if you think up is best case. Okay? So this was intervention. And I told everybody as it was falling that it will not last. But this is policy change. Okay? And it falls. How long would... So now this is July 1. We'll just put July. When do I buy it back? Yeah, you see, again, if you don't know this stuff, you're going to, you're going to struggle at best. Because people that know will just run you over. Well, I'd like to start before then, Mahai. Third week of September. Thank you, Lucas. If I were to start even earlier, like at least be open-minded, like ready, willing, and able. I don't expect to go long until third week of July or third week of September. But when am I open-minded? When am I RWA, ready, willing, and able? Third week of August. Thank you. So there's my window. I'm open-minded third week of August. Oh, I will be long by third week of September. It's not inside trading. It's just, male model stuff. At male model school, they teach you this stuff. How to walk a catway, how to how to put baby oil on your shoulders. And they teach you macroeconomics and seasonality. Yeah, it's just male model stuff. That's just what I learned. Yeah, cool. Now I need to learn how to have a balanced life. I don't know if you can tell. My arm is killing me. I've been working so hard for so long. Oh, my body's breaking down. I gotta get my life in order. Yeah. All right. Cool. Has anyone bought my ETF yet? I need to put that in my routine. I forgot to even tell you. It's not a sales pitch. I'm not a salesman. So I'm going to build this into the website for you to review. All the legal documents are here. So again, this isn't a sales pitch. But my vision for traders.com is look, I can give you all the fundamentals so you can make your own decisions. I can give you all the technicals so you can make your own decisions. I can provide performance coaching so that they can help you learn how to make the decisions better and just have human beings to throw ideas at and get feedback. 100 hours of training courses to help you make decisions. An execution partner so that when you decide to make a decision, it's done honestly. When you click a button, it gets executed just like you wanted. But what if you get to a point in your life where you're like, I just want Wayne to do it? Well, I'm not a portfolio manager here. I'm not the one trading, but it's a very, 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 very similar strategy for what I do for our endowments and for what we do at the Council of Investment Advisors. Very, very, very similar. It's called the Peerless Option Income Wheel. And here's the cool thing. We're the only one doing this strategy. That's it. The only one. We even have a patent pending on it. So anyways, so I'm going to embed this into TRADARS so you can always just check it out. Again, I'm not selling you anything. I just represent this group, senior executive, CEO. So you should, maybe one day you should check it out and say, yeah. So I manage charitable endowments and now a publicly traded ETF. As you can see, when you pull up the symbol, you can pull it up right now. Pull it up on your phone. The ticker is WHEEL because we use a strategy. It's been tried and true. Like, it's been around for a long time. It's something that Warren Buffett apparently uses all the time to get into trades, to get into positions, but also to increase income on what he already owns. So it's like we have our own unique tweak on it, and that's why we're trying to get the patent. We have a unique twist on it, but it's a well-known, tried and true strategy that traders love. So, anyways, I like it because, check this out. So it's a brand new fund. It IPO'd in May. Okay, IPO'd in May, and they've issued 2 dividends because it's quarterly. But according to the filings with the SEC, right, when you annualize what we've distributed, it's almost 14.5%. Mahai, 14.44 has annualized is what has already been issued. It's cool. It's nice, right? Like, that's exactly, I love it. So I've hung out with these guys. I talk to them every day now. Yeah. Cool. So it's just like, hey, yeah, just check it out. All I'm trying to say here is I see it as an extension of traders.com where I can teach you how to make your own decisions. And now you have a vehicle also to have professionals, do some trading for you. Either do it yourself or hire a professional. Now you go. Okay. Yeah, so in Europe, at least parts of Europe, I've been told you have to fill out a little extra paperwork because they look at ETFs as kind of like trading futures and options and all that kind of stuff. America doesn't see it that way. America kind of treats it like a mutual fund. So I think you just have to like fill out one little, probably click a bunch of disclaimers and that's it. So don't freak out about it, but make sure you read the risks because, dude, it's open market. Right? Like, we face those risks every day. I get updates every day. We have trading meetings a couple of times a week. Like, it's legit, right? Like, this is not a set it and forget it. This is a very active strategy with people, like I said, trading every few days. You got to adjust the portfolio. So it's cool. It's cool. It's a way to be involved. But do your own due diligence. Read all the documents. I forget to tell you that this is something that I'm working on and I'm involved in and is wonderful. In my humble opinion, it's wonderful. Right? It's the wheel strategy. We're the only one running a wheel strategy through an ETF, and our symbol is wheel. Dude. Wicked smart. So I consider your ETF, my ETF, our ETF, traders.com ETF. Okay, cool. Cool, right? Cool beans. All right, so anyways, anywho, let's move on.com. Those are the yens. I'm just once again showing you that these yen pairs are not bullish and they've been planned out for a while. Nothing new. Okay. In fact, these are follow-ups. Okay. So let's look at this old plan. Okay. It made a lower low. What did the wane do? I did the Fibonacci because the general plan is somewhere between the 382 and the 618, or as I have 33 and 66. Somewhere in there you would assume down. Okay, that's the strategy. Did it go up? Yes. Did it go up to the 382, 618? Yes. Did it go higher? Yes. It ended up triple topping. So not perfect. Okay, great. But did it end up falling in the direction? Yes. Now, the interesting thing is the 618, so let me use different colors here. I guess I'll use green. The 618 predicts a 1382, and the 382 predicts the 1618, and they both ended up being respected. Cool. So anyways, now we get the new lower low. So this is lower low 1. This is lower low 2, correct? So what do you do when you get a new lower low? What's the strategy? Remember, at that time you don't know the future. So just tell me the strategy. What's the pattern? What's the strategy? What would you expect to happen next? Just like this first one, the strategy was we got a lower low, so now we expect a lower high, and we have some guesswork on where that would likely be, but we don't know, but you're ready, willing, and able. A lower high, but where lower high? Where would the lower high take place? Role reversal. So what used to be support now becomes resistance. So the strategy, if you were going to try to predict the future, is this. What do you think? Makes sense, right? Now, is it perfect? No. Is this, is this in the 100-hour training course? Yeah. Uche, all of them. Technical analysis is not time dependent. They're all time series. There's price and time, that's it. Now, the next thing is strategy is longer term charts, Uche. So 4-hour, daily, even weekly. Even weekly. So you start there because it answers the question, Uche, where are we going? So most amateur retail traders have no idea where we're going or even where we are. They just like, green candle, I guess that means buy. No, it does not. It means bears probably just took profit. Doesn't necessarily mean bulls bought. So anyways, so I like, and I've always been this way, where are we going and where are we in that process? So like talking about the yens, right? Knowing when there's going to be a headwind and knowing when there's a tailwind, or at least having data to suggest that tailwind or headwind would be perfectly normal. Doesn't explain macroeconomics in the moment, doesn't explain market sentiment in the moment, but at least we know what is normal. So the classic example I give is Thor Heyerdahl. Now, I've told this story a few times. Has anyone actually looked him up? Read any of his books now? And you're like, hey, Wayne talks about this, dude. Right? I also talk about Ernest Shackleton. But what about Thor Heyerdahl? Well, he wanted to prove that the Pacific Islands were populated by South Americans, not Asians. And they're like, dude, there's no, how could you go from Ecuador to Papua New Guinea? They're just like, dude, do you understand it's 6,000 miles? It's twice the distance of the United States. Like, you can't go to Ecuador to the Solomon Islands or whatever it was on a raft at open sea when we're talking the distance of New York City to Los Angeles and back to New York City on a raft in the open ocean. So he said, yeah, you can. So how does he know? How does he have this belief system? Why does he think this is even true? Well, he studied the seasonality of wind and currents, sea current, right? So ocean currents and the wind, seasonality. So not only did he say you can go from Ecuador to the other side of the Pacific Ocean, he's like, I'm going to build a raft by hand. I'm going to chop down some trees in Ecuador. I'm going to make some ropes from some vines. I'm going to make a raft. I'm going to travel 5,000 or 6,000 miles across the open sea. Right? With 2 other guys, so it's a pretty nice size raft. I mean, it's not huge, but and we are going to land on this one particular day. We're going to land on this island on this particular day. And you know what? He did it. He did it. Landed on the day. This is just floating on a raft. So you kind of need to know the seasons, right? You need to know when the current will pick you up, when the winds will pick you up, and all of that. It's useful data. And so you want to know when you're fighting the wind or going with the wind, right? And so that's what all of this is about, or much of it. I can't say all of it, but this is where we're trying to pick up good data from the seasonal data, from the macro data, but also the high time frames. And the rest is just timing. When do you hit the current? Oh, yeah. When will the wind blow? Do you know what day the wind will blow? No. Do you know how fast the wind will blow on any given day? No. Do you know when the trade winds usually go from east to west? Yes. Okay. So anyways, and this is just technical analysis. So you're like, well, Wayne, this one failed. Yeah, that happens, bro. Because all it is a higher high, higher low, which predicts a higher high. So it's not that this is wrong, but you recognize that that plan has failed and that we have a change in direction. You need to be able to adapt. So now the lower low predicts, just like the other one, predicts the lower high. I'm measuring, we got 2. Oh, that's, wait, I got a couple of things going on here, don't I? There we, oh yeah, that's what I was doing. So you can do a higher time frame analysis, right? And you can say, well, if you're looking at it from this time frame, okay, that predicts a 1618, but actually I look at this as a 66. What kind of information goes into the fundamentals? This is where people ask me, what do you think about Aussie yen? I only know stuff about Aussie yen. What do I think about it? think it's Australian dollar versus Japanese yen. What do you mean think about it? Okay. So we can go to like, let's analyze it. How about that? What do I think about it? I don't know. I think you should analyze it. So we have the data. It's a negative 12. Okay. Now we can see COT data is not there yet, or we're lacking it. It's not scoring it here. What do we know? Okay, 77% of the institutional market is short Aussie. And the yen is 50-50. Okay. So the market is just sort of deciding maybe to become more and more bearish. Okay? As someone else pointed out earlier, we reviewed this. Who was it? Don. Was it Don? I think it was Don mentioned it earlier. We had analyzed the COT data on Monday or Tuesday, and we can see what's happening. We're not, right? The market isn't quite buying yen yet. We are watching it. It's slightly bullish, and yen became, now, it looks like it became more bullish. What happened is it became less bearish. Is that bullish? No, not necessarily, but we can distinguish the two. At some point, maybe it does become, people actually buying the yen. So we know they're not actually buying the yen, but it is becoming more likely. So we can get granular detail here of, we've analyzed this and we know the nitty-gritty. Okay? And check this out. This is usually going up. This is what I'm saying, headwind. It's falling, but it usually goes up. Okay? Now this pair tops out usually that May, June. So I said June, July. Well, there's an April to May period, and then that June, July period of down. And then here you see I typically buy the third week of August to the third week of September. How do I know that? I actually use the tools. I actually do it. Look at that. I have it in my brain. I've looked at it so much. So this usually goes up, but it's not. It's clearly going down. This is usually what's happening. So what I was trying to say is this is a headwind. It's pushing it down. But what about the period in which it typically falls anyways? So let's say sort of April, May is the number on this particular pair, and it drops all the way to August, September. So second quarter, third quarter. So what if it's already falling, continues this trend because the Bank of Japan continues to raise interest rates, and then we get into a period where it normally falls anyways. Now it's a tailwind. And by that time, right, Don, we probably would see people actually buying the yen. Right now, the yen is getting stronger, 3.31% week over week stronger. But it's not because they're buying, it's because it's not bulls buying, it's bears buying to exit their shorts. So it's the death of the carry trade happening, but no one is bulls are not actually buying the yen. When should you start? Somewhere around April and May, you should start buying the yen if that's what you want to do. That's called strategy. So I'm combining technical and fundamental analysis with seasonality. Oh my God, this is cray-cray, isn't it? Okay, Australia, less than expected GDP. Okay. just so on and so forth. Looking at jobs, employment, all that kind of stuff. So anyways, I don't have an opinion. It is what it is. Okay. Forecast 250, right, Richard? Came in 240. Okay, which means just this one piece of data, Australia could, if they wanted to. No, I think they want it to be 2. But let's just say it was expected to be 2.5. It came out slightly lower, which is another notch in the belt for the RBA. If they wanted to cut interest rates, that's certainly not going to prevent it. And if they did, that would weaken the Aussie, which means Aussie yen down. Okay. Meanwhile, in Japan, CPI was expected to be 3.2. It came out 3.6. Oh my God, they're going to have to raise interest rates. That means this pair goes down. That would strengthen the yen. Cut interest rates, weaken. Raise interest rates, strengthen. Either way, down, down, down. So. Christina says, hey, can you look at gold? Yeah, I could, but I'm not going to. I'm done. I'm spent. I'm exhausted. Look, I invite you to be part of the TRADARS community. I got some killer stuff, and we have an awesome community. You can see technicals and fundamentals are redonkulous. I'll give you some gold. How about that? And then we'll go. Let me do the gold for Christina. All right, I'm going to go to commodities. I'm going to go to settings. Okay, I'm only going to look at gold, XAU, XAME. Okay, and I'm going to look at, well, let's turn on all patterns just for gold. All right, let's do it. Let's do this. There's only 2 patterns. On the 1 hour chart, it looks like it has the potential to fall to support. Okay? Now, the interesting thing is, if it breaks through, okay, what do we have? Anybody? It becomes a new pattern, head and shoulders. All right, so that's on the 1 hour. So is that happening? Right now, the next leg, okay, remember, it's not a prediction, it's not a signal. This is a pattern, and the next wave of this pattern is down to support. Will it break? Nobody knows. Will it bounce? Nobody knows. That's on the hour. It is happening. Okay. But if it was like this, is that a head and shoulders pattern, Mahai? No, and that's why it's likely not. This is likely what it actually is. If you actually opened your chart, okay, it's probably down and now sideways. So that's not a head and shoulders. Head and shoulders would be this way. Okay. It's a reversal pattern. So we're not calling it that. It's just drop to support. So it's almost like TRADARS sees this as a little bit rangy. Okay, let's look at the 4 hour chart. Okay. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Next leg of this up channel is up, 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 up. Okay. And then I would assume down, down, buy, and then another wave. But that's probably this week, next week. Notice the other part of this is price action. So when you get the high, while you're still at the high, and you guys have seen me do this a million times, while you're at the high, you draw this. That's the next buy zone. So you can add another if it drops down. Well, it did. Then it makes a new higher high. What do? Well, then you take the old higher high, and this is a place where you'd consider adding yet another. Okay? And so if this new leg makes a higher high, then I'm going to drag this across, and I'll buy a third. Stack and pack, baby. Price action. Pattern. Fundamentals. If this is happening, we're probably expecting inflation to be persistently high and growing. So if the Fed later today says, hey, we have concern about inflation returning, that means two things. One, they're not going to cut. And two, you might want to hedge inflation. If the Fed tells you it's coming, then maybe people buy some gold. I don't know. But here's the thing. I looked at the 15-minute, the 30-minute, the 60-minute, the 1 hour, the 4 hour, and daily charts for gold. I looked for the top 20 different patterns. Okay, on gold, on 5 time frames. Okay, times. All right, what does that mean? I looked for 100 instances that were tradable, repeatable patterns, and I saw this little drop to support, but the bigger rise long. So you see the head and shoulders now? Okay, so what does this mean? This one's probably wrong. Wrong in the sense that it is a head and shoulders. Should you be worried? Yes. So, right? You need to decide, are you a bull or a bear fundamentally? Because check this out. If this dropped and made a lower low, this channel is dead. So this isn't making a prediction that it's going to go up. Stop looking for a signal service. The only thing you're doing is doing yourself a disservice. This is saying if the up channel continues, okay, that's the next leg based on where support and resistance is. So I want you to think even a little bit further and say, well, if this, which is a shorter time frame, then that, which is a longer time frame. Ooh. Will we know? Okay, so what'll happen is if this does start to roll over, I bet you this emerging up channel disappears and you start to see this turn into a head and shoulders, which is on the smaller time frame, the reversal pattern. This is a continuation pattern, but one of these is likely to expand and the other one fails. Which one? I don't know. That's your job. So now you open your charts and you use your technical analysis the best you can. Is this forming into a long-term head and shoulders pattern? Yeah, wouldn't you like to know? That's what you should be analyzing. See, nothing random anymore. You see the opportunity, which is up if you're a bull, and fundamentally still looks bullish, as you saw. Actually, I didn't show it to you, right? All right, so we'll just say whatever. All right, so fundamentally, let's say you decide to be a bull. This is an opportunity, and this is a threat, and you can see the threat can come into your opportunity zone. And so you're like, ooh, well, If the 60-minute wants to take it down, that's going to turn this up channel into a head and shoulders. And now I know my vulnerability. You know your opportunity, but you also know your threat. Everybody else just trains blind. Huh? I wouldn't want to do that. So you see the opportunities and threats. Dum-dums look at this as signals. You're not going to make it, son. You're not going to make it. If you want other people to make decisions for you, then you should just go ahead and make that happen and stop winging it. Cool. Vensu, is that how I say your name? Vensu, or is it ooh or is it oh? But nonetheless, welcome to the team. Vensu, nice. Welcome to the team. You're going to start making institutional quality decisions. That's right, Uche? If someone else makes the decision, you're not a trader. Right? Yeah. Yeah, for sure, right? So anyways, there you go, Christina. I did it technically, not fundamentally, but everything is on traders.com, so just become part of the community. Simple as that. Insert a credit card, and I spent more on charts. I spent more just having charts when I first started trading Forex. Just my charts. Just these things. Cost me $300 a month. Right? The premium VIP version, the top of the notch. The full pro version of TRADARS is $300. To me, it's so I know $300 is $300. But, you know, when I first started trading, my just to be a trader, like my internet, my charting package, my broker, the services I paid for news. Remember, YouTube hadn't been invented yet, right? And so just like if you just wanted to have a broker, some charts, some internet, I remember the day I got 2 screens. I felt like a baller, you know, but your operating cost was a couple of grand just to be a Forex trader. Yeah. Just bare minimum. Yeah. So anyways, so like, well, and you know, so my COT data, I guess we can go there and then I'll leave you guys, but, you know, my COT data, I used to download this manually. Okay, I used to download this manually. And I spent hours and hours and hours on it. And it's just tables. I'll show you in a second what it looks like. But I download this manually. And, of course, I couldn't just sort things, right? So you had to look at one thing at a time, really think about it. Okay, a change in longs, a change in shorts. And you would write it all down, and then you'd try to do like, do the move be more bullish or more bearish? And you're also trying to like find, you know, tops and bottoms in contracts. It took hours. And then I probably $300 a month. I paid a service to visualize it, to basically do something like this. Now, it wasn't this nice. I think it just looked like this, something like this. Okay. And yeah, I think it was basically this chart, this week-to-week data. There you go. That's what it looked like. All right, so I paid $300 a month for the green line and the red line, just to help me do my COT. So like, that's what I'm like, in my mind, TRADARS, I know is $300 ain't chump change, but to me it's stupid cheap. Like I paid $300 just for this, and it's probably something you don't even look at enough. And you're like, oh yeah, I need to look at that more. Dude, if you were paying $300 just for that, which I did, then you'd pay more attention, This is the change in positioning for both euro and dollar. Okay, dollar's flat, euro's bullish, you see? And the reason I paid $300 a month is cftc.gov, commitment to traders. What am I doing? Where's the financials? Come on, where's the financials? Do they move it, or am I just not seeing it? Oh, down there. Okay. Financial futures and options combined. No. Okay, this one. There you go. So I'd spend hours and hours and hours going through this every week. Okay. Oh, look, British pound. Australian dollar. Mexican peso, you see? Kiwi dollar. Okay. 13,484 contracts long, 53,527 short. We got more longs and more shorts, but not many more shorts. So interesting. So, the market is short. Okay, but not amazing change here. And then you can look at open interest and how many contracts and all that. All right. And South African Rand and Dow Jones Industrial Average. Okay, cool. So you can go through all of this. But you see, it takes a lot of time and a lot of thought, right? And to organize it and say, okay, so based on what I studied on the Swiss franc and the British pound, what should I do? Okay. So you can imagine going from that, to, where were we? From that to this was very helpful. And so I'm like, what should I do? What was the change in Aussie dollar week over week? Okay, well, the market is long Aussie versus the US dollar. Wait, I got it backwards. Dollar, Aussie dollar. Oh, no, they're long US dollar, short. Yeah, there you go. So on this day, the market actually got net short. December 13th, the market started selling off the Aussie dollar and went long the USD. So and you can see change continued about the same. It's about neutral, a little more buyers in Aussie dollar, a little more buyers in US dollar. So net, still, market is long US dollar, short Aussie dollar. Cool. Isn't that nice? Would you pay, if you could just go through everything and just see how institutional positions are made? Yeah, so I would pay $300 just so I can make better decisions. Okay? That's a real thing. That's a real story. I'm like, I need this information to make intelligent, informed decisions based on what hedge funds are doing. And it took me so long that I'm willing to pay $300 to get the data and understand it, not in hours and hours and hours, but just a couple of minutes a week. Was that worth $300 a month? Yes. And it's just one tiny subchapter on a beautiful page. Right? So that's my point of view. I don't mean to make $300 a month sound like nonsense. But from my point of view, it's like, just to run an intelligent Forex trading business, I would spend many, many thousands. And now you can have way more data than I ever had when I started fundamentally and technically, and a whole coaching team. It's only $300 a month. Dude, that's stupid. That's so stupid cheap. From my point of view, that is ridiculous. Cool. So be ridiculous. Join the team. Let's work together every day. Hire me as your macroeconomist. Yeah. Neato, right? All right. That's it. I'm done. Thank you for everything you do. You're beautiful. You're beautiful. You're beautiful. Huh? King Kong pounding on my chest. So let's go out there. Let's go compete. Markets are about to open. Ding, 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 ding. Remember, this is a competition. Okay? Be all you can be. It's a competition. Time to put your big girl panties on and get out there and fight. Go get that cheese, right, Mikey? Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'm trying to motivate you. I'm not talking down to you. I'm trying to motivate you. Let's work together. Let's get this. Let's build an institution around your trading. Don't need to be an amateur retail trader anymore. 300